to. At least that's what the intraday chart of the Nifty will indicate. A large part of the market's problem is because of banks, both PSU and private, both under selling pressure. In fact, the PSU Bank Index is down 3% today, but stocks like Yes Bank also falling quite a bit. Vaibhav Agrawal, VP Research at Angel, now joins in. Vaibhav, good morning. First, a word on some of these private sector banks. All of a sudden, we've started to see big fall in the names like Yes Bank, even ICICI, Axis. What do you think could be bothering the market?
I think, in the near term, it would be the worries on the currency depreciating further, because of the moves happening on China, etc. There's a clear risk that our currency would also depreciate further, and clearly private sector banks are quite well owned by FII, so, this could be, attributed to that.
Okay. Vaibhav, what is the concern coming in from the exposure maybe to the steel space for the PSU banks, and your sense in terms of which ones would be the most susceptible in terms of exposure?
Well, apart from what is happening on the currency front, clearly, for the next quarter or two, there would remain asset quality pain as well. And within that, as you mentioned, that the steel sector has, gotten worse in the last 3 months, and there could be more pain coming up. And within that, if you actually see some of the PSU bank stocks which have done well, like Bank of Baroda as well, have quite a lot of steel exposure, more than 9% of their total exposure. So, and even if you look at most of the other PSU banks, it is in the range of 7 to 9%. So, although some amount of this pain has already been recognized in the form of NPAs or restructuring, but there is likely to be more to come in the next, quarter or two.
Okay, Vaibhav, Bank of Baroda, it had such a big re-rating move, but for last 2 days we've seen some bit of reality check. Do you think at current price, is it overvalued? Is it still a good bargain? What's your call on that stock?
Well, actually, in our view, the valuations are trading at a premium which to an extent is not, justified as compared to the other larger, PSU banks. Sure, there have been some positives, but, the broader changes which the government has done, that would probably play out over, years and not months or quarters. And in the near term, like I mentioned, between PSU banks, there is not much to choose in terms of the exposures they have. Almost all of them have similarly high exposures. Some may have higher to steel, some may have higher to infrastructure, but put together their exposure to stressed assets remains high, including Bank of Baroda. So a premium of, more than 20% to some of the other larger banks, in our view is not justified. So we are neutral in, from the valuation standpoint.
Vaibhav, I'm sure you must have tracked the Amtech story and everything going on there. How worried are you from an analyst perspective with regards to Amtech, their group consolidated debt at around 18,000 crores and the GLF being formed, etc. All of the news pieces doing the rounds, you must have worked the phones as well. So are you worried from an analyst perspective on that?
So we don't necessarily form our views purely based on, individual exposures. But sure, I mean, this is another one of the many large exposures, which are going to be problematic in the next quarter or two. And of course, it's spread across banks. But, so rather than going very, individual exposure-wise, this is, just adds to the further, overall pressure that is there in the system yet, which is yet to be seen in the next quarter or two.
Okay, quickly, if you could just list out your top buys in the banking space right now.
So, our buys mostly remain in the private sector space, and within that, given the near-term concern where there might be some more selling pressure, we would go for the slightly more defensive ones. Even an HDFC Bank is a buy for us now, with around 18-19% upside. And, other than that, Axis Bank also remains a buy. Yes Bank fundamentally is also a buy, but we would probably wait because it's a slightly higher beta counter and may see more correction, in this current phase. And we would wait for slightly lower levels to get into that again. But yeah, I mean, broadly, it is the private sector banks that we continue to like.
All right.